Bloomberg Audio Studios. Podcasts, radio, news.
The CEO of TIAA is sitting down with Bloomberg's David
Gura.
With
inflation and get exposure to markets. So we have been in the business of guaranteed income for over 100 years. And I can tell you that not a day goes by that I hear from either a participant or a family member that says, thank you. My dad is now 90 years old and he's still getting that check. You know, my mother is 80, her husband passed away, and she's still able to get that check from TIAA. So the point is that that guaranteed income was an annuity. It was in their retirement plan. And so when I think about where we are today, you're right, there's so many permutations around annuities, so many different flavors. And so we as an industry have to make sure that we can simplify it, or that people are clear on what it is that they have and what it means. So there is work that we are doing. But when I think about annuities within your allocation, it is not complicated. It is, you have exposure to the stock market, you have exposure to bonds, and then you have exposure to insurance. It's simple. It's part of your retirement allocation. It's different than a retail annuity. I think the most important thing is to understand what it is and what it's not. An annuity is not exposure to equities and alpha. Annuities give you longevity protection. It gives you consistency, and it gives you the confidence that you can have income that you won't outlive. And I think that in this environment is so important that we talk more about annuities, make sure people understand it, continue to do our job to simplify it and make sure people are educated around it. But providing access in retirement vehicles is what we've done for over 100 years in the 403B market, and we most recently have rolled it out in the 401k market.
So going back to 1918 and that initial $1 million contribution from Andrew Carnegie to where we are today, the company has grown tremendously, overseas $1.3, $1.4 trillion worth of assets. Can you just talk a bit about that investing strategy you were alluding to just a moment ago? It strikes me as it's kind of very lowercase c conservative. There's not a lot exotic about these main portfolios. Could you just talk about the company's approach to investing?
Well, for us at TIAA and Naveen, you know, we are liability driven. We want to make sure that we are investing in a way that our participants can feel confident that 20, 30, 40, 50 years from now, that the money will be there, it will be well invested, and they will be able to have income that they cannot outlive. And so when we look at what we're doing, we have our general account. We also, with Naveen, have third-party assets. And what's important there is whatever returns that we're getting from Naveen, that ultimately goes back to our participants. We return all of our earnings back to our participants. And so that allows them to get outside performance over time. And so within our company, we serve the 403B market. We've done that. That's a nod to our heritage. We will continue to do that. We see that there's tremendous opportunity to make sure the people that are helping and serving so many millions of Americans, whether it's higher ed and healthcare, can feel comfortable and confident about their retirement plan. But we're also, in partnership with Naveen, taking that benefit into the 401k market so that companies can add insurance into their allocation, and we're very excited about that. And of course, with respect to Naveen and their investment strategy, we do a lot in alternatives. So think about it as 85% of our general account is fixed income, 15% can be alternatives. And so that allows everyday participants through our general account to have access to alternatives, to have access to real estate, infrastructure, farmland, et cetera, PE, in a very safe way to generate more alpha for them. But the most important thing is that for us, it is liability driven. We want to make sure that we're investing in a way that will give them the performance and accumulation, but give them the confidence and decum that they will have income that they won't outlive and that we will be there for them.
Going back to the crisis, something that you proposed in an op-ed you wrote a couple weeks ago for the New York Times is more of a public-private partnership, more engagement with policymakers in the face of this crisis. Yeah. Here we are a few weeks into a new administration, a new Congress. How optimistic are you both about the appetite for that by the new president, by that Congress, and the level of engagement that we've seen so far on in retirement issues?
Yeah, the good news is when you're talking about retirement, it doesn't matter if you are in rural America, urban, suburban. It's not a blue state, it's not a red state issue. It absolutely is an American issue that we can all relate to. And so I am optimistic. And the reason why I'm optimistic is that the policy that we have been able to achieve over many years as an industry have been bipartisan. It did not matter who was in office. It did not matter what the ratios were between Democrats and Republicans. It was an issue that everyone came together on. And so I'm looking forward to us continuing to tell the story about how important retirement security is. I'm excited about some of the progress we've made with the Secure Act to make it easier for people to have access to retirement. And so that conversation will continue. We're looking forward to engaging with the new administration and talking about how do we continue to make sure that more Americans can have access to a secure retirement, and how do we make sure that by doing that, that can put less burden on Social Security. By doing that, that puts more money to work so that the caregivers, children are not having to carry that burden. And so I do think that it will continue to be a bipartisan issue, and it is so important. We cannot close this retirement gap without private-public partnership. We have to have good policy. And we have to make sure that we in the private sector are doing our part to educate our employees, to make sure that the plans are designed so that people can have access no matter where they are within their employee base, whether they're senior executives or the people that are on the front line or working in the mailroom, having plans that are designed in a way where you have education, in a way that it has exposure to equities, bonds, and insurance, and having great policy so that more people can have access, to me, is the job to be done. And it is something that has to be done in both private and public sector.
I just want to turn to how you're navigating this moment. And you and I last spoke, it was a few years back during COVID. I did a piece on Black Wall Street and the Tulsa Race Massacre, and I asked you just about the long legacy of that. And we got to talking about DEI, got to talking about how you prioritize that within the company. I think you said it was a cornerstone of what TIAA has done. You, I'm sure, have paid attention to the recent conversation about that. Has it changed notionally the way that your company approaches these issues? What do you make of companies that have, in light of this increased scrutiny, stepped back from some of the commitments they've made before?
Yeah, I mean, I'll speak to it through the lens of TIAA and through the lens of me being a CEO. You know, I think that for us, our values are very clear. You know, and our values go back well over 100 years, and that will continue to remain. I've always said that talent is created equally, opportunity is not. And so if the objective is to continue a pursuit towards meritocracy, knowing that we started with exclusionary practices and not having everyone have access to entering corporate America, if the objective is excellence, if the objective is to make sure that we can cast the widest net across our country to attract the very best talent, to develop that talent, and to make sure that that talent stays, then the outcome will continue to be a diverse workforce, because I do believe that talent is there. And so for us, we will absolutely comply with every law, every regulation to the highest standard. And we also realize that there is a need for more talent. We also recognize that there are jobs to be done across our workplace to make sure that everyone feels that they can have access. And when I say everyone, I mean everyone. And so when I think about the opportunity for us, I think the opportunity is to stay focused on our values, to stay focused on making sure that we can cast the widest net across our country, and that when people enter the workplace of TIAA, they wear one jersey, that's the TIAA jersey, and they're very aligned with our mission. And our mission is to ensure that millions of Americans can have a secure retirement. And I believe that if we stay focused on that, navigate whatever the environment is, always, complying to the highest standard, the outcome of talent will be a diverse workforce.
So just to be clear, when the president says last night with the sweep of a pen, he's ended DEI in government and in the private sector, nothing has changed yet in terms of your
we're always going to understand what the president of the United States is requiring for companies, and we'll comply. But what has not changed is our commitment to talent. What has not changed is making sure that we cast a wider net. And if the president is very much focused on excellence, then we are well positioned at TIAA to continue to make sure that we do just that, while making sure that we comply to any standards, any law, and any regulation, and we will absolutely do that.
You're in this kind of rarefied position. I think like the head of CalSTRS is probably in a similar one, where you're able to exert influence on the companies on whom you invest. You can make your opinions known about corporate board composition, for instance. Is that something that you continue to do, continue to prioritize, and does that stand to change with what's happened over these last few weeks?
Yeah, I mean, I think, clearly, making sure that we're navigating the environment and what executive actions, executive orders, laws, et cetera. And like I said, we'll make sure we do all of that. But, we're investing in thousands of companies. And it is important for us to understand who the company is, what they're about, what is their philosophy, what is their strategy, understanding their leadership. And so that won't change. If there's things that we have to edit, we'll navigate that. But as an institutional investor, it is very important where we're deploying our participants' money, we want to make sure that we're doing it well and that we understand the companies that we're investing in so that our portfolio managers can have as much information as they can to make very sound decisions about the overall investment strategy.
You oversee this huge company that has its hand in so many things, and obviously you have to interface with regulators as well. Are you worried about the state of regulation in this country, that you have to interact with them at the state level, the federal level? Do you worry about the cuts that we're seeing in terms of the products that you offer, this broader conversation about what people have when they retire?
Well, the good news is we have a range of solutions, and that hasn't changed. So we haven't seen any impact there in terms of our investment strategy, in terms of what we're here to do. As I think about regulation, I think clearly the president's been clear in wanting to have some deregulation, and that will be a positive thing for companies. But regulation is good. You want to make sure that, we're in a regulated industry. We need to have sound regulation. Clearly, if there's opportunities to improve, the president's been clear about wanting to do that and what that can unleash in terms of companies and their earnings. But I think the most important thing is, one, for us, making sure that we're clear on what we're here to do, which is provide a secure retirement for millions of Americans, understanding the regulatory landscape and whatever laws that gets passed with the president and the new administration, and adhere to that, but never lose sight of the main thing, which is to make sure that we have sound investment practices, making sure we continue to attract the best talent, and make sure that we deliver on our retirees. Whatever the regulatory environment will be, we will navigate that. We've been around for 100 years. We've seen the highs, the lows, and everything in between. But what hasn't changed, regardless of the environment, is delivering for our participants, and that won't change, regardless of any shifts in the overall environment.
So last question, I'm curious how you were thinking about the economy, thinking about markets today. We lived through a lot just in the last 24 hours with the imposition of this trade war. How are you thinking about that?
All right, that was the CEO of TIAA with Bloomberg's David Gura. We got to get her on our show.
Yeah, she was great.
As a guest. She was fantastic.
David Gura was too.
He's okay.
Yeah.
He knows what he's talking about. Host of the Big Take
There you go.
podcast, which I love.